Hey guys, welcome to tonight's training. We're going to go over drawing zones and the easiest way to mark up zones on your chart so you can find areas where price is rejected and come to and then broken through and retested and continue to move on. So let's get started. So we start here on the 4-hour time frame. And what I like to do is I like to take my horizontal ray tool up here, and what I'm looking for is several points on the chart in which price has come up and rejected. And what I do is I come in here and I place my horizontal ray right there to create a resistance in which we can see price has moved up and moved away, moved up and moved away, moved up and moved away. And so what I like to do is create a zone so that we can cover the most area to get an idea in which price has moved to. So I take the horizontal ray tool, I put it on twice, and then I take my box tool and I draw a line. As we can see, when we zoom out, that price, we have a nice solid zone in which price is wicked, reject. Come up, reject. Also what I like to do is take, just to draw zone to zone, is I'll come down here and I'll put a zone right down here just for the future, in which I will box that zone off right there as well. And then if you want to extend your zones out, we'll lock that in. You come out here, I like to just type in 5,000, and then I'll do the same up here. Type in 5,000, and all that does is cause the yellow box to extend farther out, because the horizontal ray will continue forever, but the box only goes for a certain distance. So as we can see, with all JPY on the 4-hour time frame, price has moved up, pushed away, moved up, pushed away. So we know this is a strong area of resistance, but what happens when we break through it? So as we break through, price came back, retested our zone in which it had tested several times before, but it moved down. But as we broke through the zone, it came back, retested, and continued to push higher, in which it will move into the next zone. So if we really wanted to, we could come up here and find our next zone in which we think price might move to. And as we can see right here, we have some area where we had a hard push, pull up, reject. So what I did was I zoomed out, and I'm going to come over here, and I can see that where this price rejected from here was a previous level of support. So what I'll do is I'll come in here and I'll throw my horizontal ray tool right there. I will throw another one right there, and then I will draw my yellow box, and I will set my yellow box to 5,000. And so this way, what I'm looking for is, as price has continued to break, retest, and push higher, I'm looking for this area to be in a possible area for a take profit if I were to have taken this trade. So if I would have taken this trade on the break and retest, I would have had an entry somewhere in this zone, and I would have put my stop loss below the previous low if you really wanted to, or just slightly below the zone, whichever, whatever your trading plan says, and probably below this low right here, maybe 50 pips or whatever. And I would look for price as we pulled out of here to move up into this zone next. So I would look for that to be my take profit. And in this scenario, it would be a 6-to-1 risk to reward. So that's that would have been, had we been in real time and we had marked these zones up, we would have seen break, retest, push higher. So let's do another one. So here we are with CAD JPY. For some reason right now the JPYs are creating nice zones, and so I like to come in here and mark up the zones. Sorry about that. Mark up the zones. So what I'm going to do this again. I'm going to go ahead and take my horizontal ray tool, and I'm going to come in right here. We've seen this is a pretty strong area of rejection. And I'm going to drop a horizontal ray right here and right here. And the reason I'm doing that is, you can kind of play around with it, but I guess I could have possibly put it up here, but to me, these are areas where price pushed back and then pulled back below the zone, pulled back below the zone, and continued lower. So what I like to do is try to catch as many touch points as I can on the zones. So then we draw our yellow box, extend it out 5,000, and now we have a nice zone. And so if I want to draw my bottom zone for the future, I would probably take price. Where can we get the most touches? So I'll probably come in right here, and maybe something like this, and then draw my box, extend it out 5,000, and so then we have our nice zones right there. So if we zoom out, let's see if we can zoom out and see if price comes anywhere. Yep, so as we can see right here, if we were to extend this line out, we know, or this box for now, is we see that price at some point came back down and touched. Look at that, came back, just wicked that area before it rejected. So we know that this had been a touch point in the past, in which for CAD JPY. And so to me, I feel like this is a reliable zone. I guess you could have drawn it a little higher up, possibly, maybe if you really wanted to. You could, I feel like we're just getting a lot more touch points here. But you might, if you're a little more conservative, you want to draw it up here, that's fine as well. For me, I'm okay with this at the moment. I think, you know what, I think we'll go up a little higher. So we'll bring our box up here. We can consolidate it right there. Sorry guys. Let's just start. We're going to take that there. We're going to take this right there. And there we go. So it's not my favorite zone, but I'll take it. So these are adjustable, but it's just to get a good idea where price is rejected from in the past. So price has moved up, reject, moved up, reject, moved up, reject, moved up, reject, move up, reject. And so now we're in a consolidation phase. So what we're kind of looking for at the moment, let's lock these lines in just so they don't move on us. So we've locked that one in, locked that one in, locked that one in. Is we're looking for one of two things. So we're looking for price to come up here and reject down. And we could show that in the past by doing this, taking our arrows, our down arrows, and we've got a rejection there, just showing our areas of rejection. And then we reject it from here. And if we want to do that, so I like to lock them in personally. I like to lock everything in my chart. I like to keep my charts nice and clean so I can see the analysis that I came up with, and so it's not confusing when I come back to look at it at a later date if I have a late alert go off or something like that. So what I'm seeing right now is we're coming up in the zone and rejecting, right? So you could have taken a sell just strictly off coming into the zone and rejecting out. And you would be, if you took this trade, say you came up here, sold a rejection, at some point you would have been 60 pips in profit. Most likely you would have gotten stop profited because price is just kind of consolidated around, come back to entry. So you would have been 30 pips, probably 40 pips in profit from your entry, but price came back out. So we got stop profit. So it's a break-even trade. But what we're looking for now is we're either looking for price to come back up here and reject and move back down, or we're looking for price to, with a strong move, break through the zone, sit patiently, wait for a retest of the zone, and then move up higher to the next zone. So what we'll do is we'll zoom out here, and we'll go to try to find our next zone. So if you want to, you can take this. You could take this just to get an idea where the zones are. You could take right here to maybe right there and draw a box. And so if you were to take this break and retest trade, at least your TP1 that you're looking for is a move into this zone. So we would take our long position break, retest. Let's say we entered right here. You say take profit right there is your take profit. Let's say our stop is somewhere around here, just below the zone, and we push up. So it's a nice risk reward, 3 to 1. It's kind of the risk reward we're most likely looking for. But also, so a zone that has a few more touch points that I'm seeing is, and may possibly be a better, stronger zone, is right here. And so if we have enough patience, we can mark this zone up and possibly look for this one to come up here, break, retest the zone, and then move higher. So we could potentially increase our return and have a 5 to 1 trade right here. And so all we're doing is just we're moving zone to zone. So they're very easy to mark up. Just for examples, we can just keep going on this one. And we'll come here, and we'll come there, and we'll draw our box, and we'll just keep working this trade as it moves along. And you can just see the different zones in which price has potentially rejected from in the past. So let's go to USD CAD. So let's come up over here and grab our horizontal ray tool. Let's see, where is price rejected from? Go right there and right here, and then we're going to take our yellow box and we're going to draw that. So we see that price came down, broke through, or at some point came down, came and retested and rejected. If we watched our previous video on trend lines, you would also see that the zone perfectly lined up with our downtrend line. So as you saw price push down, come back up, you see that we have a resistance not only with the zone, but we also have resistance with the downtrend. So we'd be looking only for sells here. But if we broke up through the trend line, retested the zone, we would be looking for buy opportunities to move up higher, in which we would have our next zone probably about right here. Lots of rejection from where price turned. Put it there, and then we draw our yellow box. Extend it out 5,000. And I forgot to extend this one out 5,000. Doesn't really matter. I'm just doing it for the training. I do it on my charts all the time anyways. And this way you can see where if we ended up seeing a trend line break and retest, we could see where we would look for a potential take profit in the future on the buy side. And then we would just continuously go up as price moved up, looking for zone to zone in which we would take the trades. So there you go. And then if we were to come down, we would look for an area in which price rejected a lot, or a more common area of rejection. As we zoom out, we can see that this right here was a potential area of rejection. And so we would come draw this, and you can see all the touch points there. Touch points, tons of touch points right here. Price gapped up in this scenario, came back, touched this zone, and has been working its way up ever since. If we wanted to find another zone, I think that's good for now. So if we take the sells, we'd be looking to just work our way down here, not only to fill this gap, which we'll talk about in another training, but we would be looking for, we've pushed down, I would look for price to break up, retest the trend line and or the zone, and then push back down, probably in here to close this gap off, and also land in this zone. Let's do another one. So we've got USD JPY, and remember we're still up here on the 4-hour time frame. So let's see. Let's take a look here. So like I said, I'm just looking for areas in which price rejected from as a common area of rejection. So I take our horizontal ray tool, we can see that price, and by rejection I mean swiftly moved away from there, in which we can catch a lot of pips. These little tiny retraces, you don't want to have a million zones all over your chart. That just clutters the chart, makes it difficult to read. But as you can see here, we have came down, pushed, rejected off, right? As we broke through it, came up, retested it, went down, retested, and then really went down. So we know this is a high probability zone. As we extend out here, you can see just by drawing this zone right here, you can take this even further, in which price has come up and rejected, pushed higher, rejected, pushed higher, rejected, fake out, push higher. So with USD JPY, what we would be doing is looking for a possible zone of support. I would say I would go with like right here, where I see about a solid amount of touch points with a nice rejection. So we would draw this zone, and the zones are going to be different for each pair, right? So they're not always going to be equal. But as we can see, price came down, consolidated in this area, went zone to zone, back up, break, retest, pushed higher, couldn't continue to move higher, came back, consolidated, broke down below, retested, and pushed higher. For the moment on USD JPY, also you can see that we are in a downtrend. So unless I see price come back up here, pull back down, push high. I don't think this is the likely scenario. On this time frame, I would look more for price to move down here, come back up, retest that zone, retest the downtrend line, and then continue to move into our next zone, in which we will draw right here. So I'm going to see that one and that one. And as you can see when we zoom out, look at that. Very high probability reversal zone. So as we move into this, I'm going to be looking for sells most likely, because I see the downtrend. As long as we hold this downtrend and hold this zone, I'll be looking for sells on this trade. We'll see how it pans out. But you can tell that we have some high probability zones right here. I wonder if we can go right here. That would be a better one. I mean, I would take this one for now. You could possibly, if you really wanted to, we could delete this since I zoomed out. We could delete that, put it here because we're getting more touch points, and put it right there. And then draw our box, and we can put it like that. And then we would draw we would just continue to look for price to move down and just start working its way down. Or we could see price, if price breaks this, move back up. We'll draw our zone here. Let's see. Probably go right there and right there. Because not only do we have multiple touch points, we have a lot of consolidation. And then once it broke out of consolidation, retested, pushed higher. Pushed down, retested, pushed lower. Pushed through the zone, retested, pushed lower. Kept pushing, gap down, retested, broke lower, came up. If we wanted to, we could even adjust this a little bit. So it's just kind of you're just trying to look and get the most touch points. You can adjust the zones kind of how you want. They're not written in stone, but you want to make sure, like I said, that you're getting the most touch points for your trades, so that, you know, if your zone's too far off, you could end up having really bad entry points, get stopped out on a trade just to watch it move higher or lower, depending on, you know, which side of the trade you're on. So let's go to NZDJPY. So we're going to go ahead and mark up. I think we should mark up this zone right here. Seems to be a high probability area of rejection. And the reason I say that is because, as we can see, price moved up, rejection, moved up, rejection, moved up, rejection. And now we're consolidating here, which is telling me that we're rejecting from here, but because we're consolidating, we're not entirely sure that we're going to push down. They threw this little fake out right here just to come back up into the zone. And so they're just kind of sitting here at the zone. But from our previous video, we know that drawing our trend lines is super important. And we can see that price has literally come back down and is sitting here at the trend line, is rejecting off the trend line. And so we would put our up arrow right here, and we just sit and wait. And all we're sitting here waiting for is price to come up with a strong impulse candle, push through here, come back down, retest either the zone and or the trend line, and then continue higher. Or we're looking for price to come down through, retest somewhere in this area, and then push lower. And that's all we're looking for, keeping it nice and simple. And so we'll go ahead, just while we're on this training video, we'll go ahead and draw another zone. So I will zoom out here. I don't like that. I would say we'll go here and there. And we're going to go ahead and draw our box. We're going to go ahead and extend it out 5,000. And so this is the zone that we have. So if we're looking to take this trade long, we would look for the break, retest, probably a push up into this area with our stop somewhere around here. So 35 pip stop for 182 pip take profit. For the buy side, and for the sell side, we would do the opposite. So for the sell side, we would take our break, retest area. We'd probably put our stop somewhere up here, and we would be looking for maybe our entry, somewhere around there, and look for this to push down at least to here, because we could draw a zone right here. See, we have a lot of rejection right there. So we could draw a zone right here, and that would be our TP1 for this trade. So either way, you've got your zones that are helping you show where price rejects from. Finally, we'll come over here to US 30, popular indice pair to trade, which trades the Forex version of the Dow Jones. So we're going to come in here. We see these 4-hour rejections right here. In which price moved up, swiftly moved away, moved up, swiftly moved away, broke through, retested, and pushed higher. See, when you draw these up and you keep it clean and you don't have tons and tons and tons of charts, tons of lines all over your charts, it's very easy to see these things. We can see right here, in the past, price came all the way down through this, induced everyone into selling with the break and retest, which you would have caught a ton of pips, but then push back up, retested, push back up, retested, and continued to move on. And so, it's a great way to mark up your charts and have an idea in which you can look for high probability areas of rejection. I just can't stress how important it is to find these areas of rejection. And so we would take this to the downside, we would mark that right there, lock them in, draw our box, and we can see price pushed up, rejected, pushed higher, rejected, moved down, came down to this zone, rejected, came up into this zone, rejected. So you could trade this back and forth if you really wanted to. These are tens of thousands of pips. That's 14,000 pips right there. Let me find the measuring tool. It's probably another 14,000 pips right here. And if you would have decided, hey, I see that there's a possible uptrend forming right here, you would know that not only do you have an uptrend, but you have a high probability area of reversal. What do? We drop our long trade idea right here. We place our stop loss just below the zone or just below the trend line to try to stay out of reach, maybe even below the previous low right there. And this trade right here was a 4-to-1 risk to reward just to going right there. But if you went to here, it's still a 2-to-1, not the most optimal. But as we drop down from time frame to time frame, you could see that you could have actually, as we pushed up, entered right there and still ridden from zone to zone. So it's a 5-to-1 right there as we drop down to the lower time frames. So you see this, we respected this. We pushed back up, retested, pushed higher, came back to test this zone again, rejected, pushed higher. So we'll go back out to the 4-hour time frame and we'll draw our next zone. And we're just going to keep doing this over and over and over until we have, as price moves. So we've got this area right here in which price came down, rejected, pushed through, came back up, rejected, pushed down. So we know that this is a zone we want to pay attention to. And we'll just keep moving on up. There's another one right there. We'll draw that to capture those wicks. See all those touch points? See all these touch points right here? Let's see, these touch points right here. Like all of this right here. Break through, came back, retest, push down. And if you have these zones marked up on your chart, they're easy to spot. So right now, what we'll be looking for, what I'm personally looking for is I probably would not take the break and retest push higher here. I would actually wait for price to move back into this trend line, or at least somewhere around here, because I want to pay cheaper prices, and then move up into this zone right here. Or we would take the opposite, right? So we'd look for the push through, the retest of the zone and or trend line, and then a push lower to there. So just easy way to spot areas of reversal, and they're always great to have them on your charts. Like I said, try to keep it clean. Don't overcomplicate this. Just give yourself an idea, because what you don't want to do is you don't want to see price moving up and say, oh man, I need to chase this. I need to try to chase this trade. Look how hard it's pushing higher. And then you're buying into an area that was a previous level of rejection. And now you're long on a trade where the market reverses on you and completely turns short. Same with, you don't want to sell the market and, oh man, look, we rejected from, we came up and we reversed. Oh, this thing's going down, this thing's going down. And then you come here and you take a sell, not seeing this zone right here. And then price reverses on you again. So you don't want to get into those just whirlwind chasing trades back and forth. If you know where your zones are, you're not going to buy into resistance, and you're not going to sell into support, because that's not going to go well for you over the course of your trading career. So I hope this helps. If you have any questions, drop a comment drop your comment in the section below, and we'll get back to you and answer that. But I hope this video helps clear up zone trading.